You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
Basically, the sector has now become a value trap, which is a good thing if you don't trade on margin, which I learned not to in this sector from the get-go when I started getting into this sector 20 years ago, and you have a lot of cash and a lot of patience. You have to have a lot of patience and you have to have a lot of cash at times like this.
Thanks for tuning in. I'm Bill Powers, and this is Mining Stock Education, and we're checking back in with Dr. David Erfle, the Junior Miner Junkie, website juniorminerjunkie.com. And David, for visual listeners on YouTube, you are sitting outside and your house is behind you, and isn't it Mining Stocks that bought that house for you?
Yes, it was. During much better days.
Mm-hmm. And it was one in particular, right?
Yes, one in particular, Novo Resources. Absolutely, that pretty much created the down payment for this house. You know, I was fortunate to get myself and my subscribers into the private placement that they did right before they made that incredible discovery in Australia.
Yeah. And that's what with mining stocks, as Rick Rule says, you know, you're going to have a lot of losers. You just got to factor that in. But when you can get those ultra winners, it covers a lot of mistakes, doesn't it?
That's right. And it keeps us invested in this extremely frustrating but exciting sector.
That's right. Well, let's talk FOMC minutes or their meeting statement that came out in September. Looks like tapering is going to happen soon, whatever that means. And rates are going to stay where they are. I mean, what's your analysis here and how is it affecting the gold price?
The gold market is still, in uncertainty land. The Fed really still didn't give us any clarity. And that's what the gold market is waiting for is some clarity over this. Gold has really not done much over the past few months since they started talking taper in June. It's traded in a pretty tight range of about $100. But as you and your listeners know, the mining stocks have been sold aggressively, especially juniors that do not have any cash flow. As far as what the Fed said, they really, half the members now want to raise rates sooner, and this taper, like you said, is probably going to start in November. He basically said, even the jobs report that's going to come out on October 8th doesn't need to be fantastic for us to begin tapering. And this is all reminds me of the gold stock and of the gold sector bottom of 2018. It's very reminiscent of that time. At that time, the Fed actually did start tapering in 2018, and that created the major bottom in gold at about 1167, I think it was. And before that took place, we had a huge move in the miners from January of 2016 into August of 2016. In 6 months, the sector, after being down 85% over the previous few years, it went up over 150% in 6 months, and that move took 2 years to consolidate. And at the same time, the gold price was consolidating its huge move, but this was all taking place below $1,400 gold. And also at that time, juniors, which were bottoming in the late 2018 as well, they really didn't have much cash, and a lot of them were on financial life support. And the big difference today is that even though these juniors are being thrown out with abandon, it's gone from, I think that the sector's gone from hating gold stocks to now being just apathetic about them. They just don't care. Like today, you see a lot of them just trading like they've run out of sellers, even though the gold price is down $20 again, down to $17.50. So anyway, I digress. It's the miners are now cashed up for the next couple of years, so the cash position that I built up over the past few months is getting very excited, while the core positions that I've been holding and have been adding to Some of them have been going up, some of them have been going down, but basically the sector has now become a value trap, which is a good thing if you don't trade on margin, which I learned not to in this sector from the get-go when I started getting into this sector 20 years ago, and you have a lot of cash and a lot of patience. You have to have a lot of patience and you have to have a lot of cash at times like this.
Is it a value trap only for people with a short-term outlook, though? Is that what you're communicating here too? If you have a long-term outlook?
Oh, you have a long-term outlook, you're ecstatic right now. If you, like I said, if you have a lot of cash, and I've revamped my watch list even recently because it had a few higher risk drill plays that have yet to define a resource. I saw those getting having good value, but now you don't need to go that far down the food chain to find value. I mean, there's so much value in some of these stocks that I missed the first time, back in March of last year when we had that V bottom and you really didn't have much time to do a lot of research. I mean, the V bottom was so fast, you just had to basically use your knowledge from before to get into the best stocks at that time, because they were just, everything was going up at once. This bottom is not going to be like that, and it hasn't transpired like that. This is like a Chinese water torture bottom. That is people are starting to accumulate best quality stocks, which is the best kind of bottom to have, because it gives you all kinds of time to speak with management, to vet all the best companies, and make sure you don't buy any lower margin projects or juniors that need a higher gold price to succeed. The ones that are going to bottom first, as far as the juniors are concerned, are the companies that they got a bunch of cash, they got a great management team, they've already proved up a high margin, large deposit in a safe jurisdiction, and a lot of those are being sold for tax loss because they're down on the year. It doesn't matter how good the stock is. If it's down on the year, it's being sold for tax loss right now.
And so when you're cutting some of the more risky stocks, are you putting that money into any producers? Because the argument is, producers are cheaper now than they were in 2016 when you compare them to the gold price.
Yeah, what happens during these bottoms is it's the producers, the low-cost producers, the major mining companies in the mid-tiers, and the royalty firms that bottom first. Because people have been, they've been getting paid to wait. A lot of these companies pay dividends. They're making good money with the gold price where it is now. Even with the gold price at $1,650, they're making good money, even though the all-in cost of production has risen the past quarter from $1,030 to $1,060, 67, I think, $1,067. But still, they're making, they're making lots of money at gold prices, even another $100 lower than this. So people, investors are being rewarded for holding stocks like that. And I don't invest in mid-tiers, majors, or royalty companies, because I see much more value, especially now, in the higher risk developer explorers, that have the attributes that I mentioned earlier, that have, they have a couple of years of cash, they did all the right things, they raised money at the right time, they have the great management teams, they're in the right jurisdiction, they have a big deposit. The deposit doesn't need $1,800 gold to make money.
Yeah.
So, I've loaded the watch list up with companies like that I missed earlier, and sure, a few growth-oriented producers as well. And I like growth-oriented producers that are small cap, that have a lot of growth, and they're also low-cost producers, but they have a lot of growth in the ground, and not a lot of debt.
Arcana Silver is on the verge of bringing the world's highest grade silver mine into production. The Revenue Virginius mine in Colorado has proven and probable silver reserves grading nearly 37 ounces per ton silver, with all-in sustaining production costs of only $8 per ounce of silver. The mine is fully funded and permitted with infrastructure already in place, and has announced production will commence in 2021. Achieving successful production should result in a significant upward share price re-rating on the Lassonde curve. Arcana trades under the ticker AUN in Toronto and AUNFF in New York. To learn more, go to arcana.com. That's AURCANA.com. And jurisdictionally, you're willing to go into Africa, even in those producers, aren't you?
Yes. Yes, absolutely. Yes, it depends on where in Africa. I mean, you have to be, jurisdictionally specific when you go to Africa. There's some most places in Africa I wouldn't go near, but absolutely. I mean, there's a lot of value in the best jurisdictions, and it will help. There's a lot of value everywhere right now.
What about the United States as a jurisdiction? Okay, this last week, there's chatter about an increased mining royalty on federal lands. And then, so with some of my investments, I talked to management. They're like, don't worry, we're on patented land. So even if they ramrod that through, it doesn't affect us. What are your thoughts on this?
Yeah, I mean, there's jurisdictional risk just about everywhere now. So you just have to pick and choose and make sure you stay in the best jurisdictions. I mean, South America, Peru and Chile used to be great jurisdictions, but now, they're becoming very socialistic and grabby, and they realize that with these higher copper prices and gold prices, that they're leaving a lot of money on the table and they want more. So, you just have to be constantly on top of all these things while you're constantly on top of the management teams and make sure they're doing the right things and all these stocks. I mean, you just got to be on top of them at all times. And, like I stressed a few months ago, I don't know how long ago it was on your show, I remember getting some grief about it, but you got to be taking some profits off the table, when these stocks are flying. I'm not saying, sell your core positions, but always be taking some money off the table. I mean, I'm very glad that I took a lot of money off the table late last year and early this year. You
move money around at this stage, though, just to clarify for listeners, right? That's what you're saying now.
And I'm fortunate enough to have a large account to where I can take all my capital gains out of the account. That's the way I operate. Since I have so much money invested in them, I don't rotate my capital gains into more mining stocks. I take them out.
And then you put it into cash, right? You don't go into general equities or anything like that.
No. I put it into other things out of the stock market.
And so what's the biggest risk right now for mining investors, Dave? Could you nail that for us?
The biggest risk is getting into the wrong companies down here. You've been afforded the time to make sure you get into the right companies, because, rising tides lift all boats when this thing finally takes off, but you want to be in the best companies because you want to hold them for the long term. I mean, this bull market hasn't even started yet, really. I mean, what's happening right now, it's still just basically a normal correction. The GDXJ went up 180% in 4.8 months, and it's now come off 40%. That's a normal correction. It doesn't feel like it, but that's basically what it is. It's taken 14 months now to come off 40%. And it's trading right now. The GDXJ is already priced in 1550 gold. So is gold going to go to 1550? I have no idea. Will the gold stocks get cremated if gold goes to 1550? I don't see it because they've already been cremated. So there's a target I'm watching on the GDXJ, which is 35. I think there's a very good possibility that gets hit. Right now, it's trying to bottom at its 200-week moving average, and also a major critical number to look at is the GDX 30. It's trying to hold 30 right now. It's pennies above 30 right now. That's a very critical support level. And its 200-week moving average is around 28. And there's an open gap from March at 27. So I think there's a very real possibility that gets seen. But, there's been so much tax loss selling that's come into these juniors, selling them all the way down, pricing in 1550 gold. Many of them have already bottomed. The best ones have already bottomed. So you just got to make sure you get into the right ones to hold for the long term, because let's face it, we're all in this for multi-baggers, right? And the only way to make multi-bagger returns is to buy in an environment like this. And it's a good time to have it's crash season. Sure, the stock market is now seeing some short covering, filling those gaps from Monday below their 200, below their 50-day moving averages on the major indices. But it's still crash season, and there's still a lot of risk out there. And the market, I think, is creating a huge top. Because it's ridiculously overvalued on a historical perspective after going up for 12 straight years.
So last time I talked to you, it was tax loss season. Now it's crash season, right? Am I getting this right?
Yeah, it's still tax loss season.
Okay.
And now you have crash season to think about at the same time.
Uh-huh.
So, but on the good side of that, most of the selling has already taken place in these juniors, in the best juniors.
So get into the stocks you like with stink bids. Would that be a wise strategy? Or
yeah, stink bids are always good during, when you see an environment like this, when the GDXJ is so oversold. On many metrics, it's as oversold as it was in late 2015. But like I said, these juniors are all cashed up. So just make sure you have a lot of cash. You don't trade on, anybody who got into this sector the past few years has already learned, don't trade on margin in this sector. You don't need to. There's plenty of leverage in it already. So, if you're not on margin and you have a lot of cash, and sure, some of your stocks that you bought a little too early, they're going down. If you didn't take full positions, you add to them. But if you've taken full positions and they're down over 20%, my rule is sell it for tax loss. I messed up. I made a bad entry. I never, ever average down. That's basically, you're in denial that you had a bad entry point, and you're hoping that it goes higher. I don't care how good the stock is. Sell it for tax loss and buy it back later after the wash trade comes off 30 days.
Dave, something I'll never do again when you're saying don't buy on margin. After I had tenfold gains in 6 months in 2016 as a new mining investor, I bought call options on JNUG. On margin. So I said to myself, what's the most leveraged I could be? And it was only, $5,000 or something like that. But I was just having a little fun. And then I lost 80% of it. So because it had already turned into.
But it's a great lesson.
Right.
It didn't cost you a lot of money.
Right.
But the lesson you learned is invaluable.
Yep.
I've done many, many stupid things in this sector in the past, but I've learned from every single one of them. And now I've worked out a very good strategy that works, and it's successful even in a market like this, especially in a market like this, because like I said, now is the time to have a lot of cash and a lot of patience and doing all your due diligence, talking to these companies because they're available. You call them up and he's like, "Can I talk?" "Oh yeah, let's talk." They've got time for investors to talk. So, take advantage of the situation. That's what you do. You never chase stocks in this sector. That's the biggest thing you learn early is you never chase stocks.
Yes. Your friend Jordan Royburn doesn't see a powerful move in gold for at least 12 months. Last time I talked with him, would you be of that persuasion, or could you see a strong up move before then?
I think before then, Jordan tends to be ultra conservative. He's probably the best technician out there as far as technical analysis in the sector is concerned. I don't see it going on that long. I see the mining shares bottoming first, because the shares always lead the metal. That's just always the way it happens. And then they're leading the metal now. Like I said, the stocks are telling us that gold, that they're already pricing in 1550 gold. And if you take a look at a long-term chart, the bull market in gold would be much healthier if it did correct down to 1550. I'm not saying that's going to happen, and I don't want to see it happen, but in the long-term perspective, it would be healthy if it did. Because if you bring up a long-term chart, it's still very, very far above its 200-week moving average, and it's only corrected 20% after doubling in 4 years. So, the 50% retracement from that move from the 1050 low to the 2100 top is 1550. It's held 3 times at the 38.2 retracement at 1675. It's held 3 times there. A lot of stops there.
And for new mining investors, don't we want to point out what Rick Rule always says? He's never had a 10-bagger that hasn't been cut in half at least once on the way to a 10-bagger. Yeah.
At least I'm holding stocks now that are down 50, 65%. I took profits in some of them, not all of them. I took profits in some of them. And I've also added to them now that they've come off this much. I've added to a few of them. I'm fortunate. My subscribers and I are fortunate enough to have a few of my top 10 have not been affected much by this correction because they bifurcated from the sector during this move and they're not down this year, so they're not being sold for tax loss. So there's a handful of stocks out there that have done that have traded as if gold is still at 1750, 1800, which is where it is.
Dave, on that note, I just thought of a new metric that investors that are looking for newsletter writers, what they can measure. The top 10 picks of a given newsletter writer performance relative to the GDXJ. And every one of you guys should publish that so potential buyers could see it. What do you think?
That's a good idea.
Yeah.
That's a good idea. Yeah. I mean, like I said, I've been fortunate to have a handful of them are trading at or near their 52-week highs here. But some of them have come off a lot more than I expected. I added to them, and they've gone down a little farther, a little more after I added to them. But that's okay because I like the long-term outlook for all of them.
Well, subscriptions to you limit it to 500. Any openings as we conclude here?
Plenty now.
Plenty, because subscriptions kind of go with gold sentiment, doesn't it?
Oh, yeah. It's amazing. But my subscribers are wonderful. They're very intelligent. They ask great questions. They don't panic. Because I try to keep them informed as much as possible. My letter goes out every week, and I basically try to anticipate the questions they're going to ask and answer them beforehand in the letter. So it's
like a treatise you send out every week, Dave. Even when I pull it open on Saturday morning, I'm like, how did this guy have all the time to write all this every week?
Well, it's my passion. I love this sector, and part of the reason why I love it so much is the frustration that I'm experiencing right now, because this is the most difficult sector on the planet to make money. And if you can make money in this sector, then it feels very, very good and gratifying.
Excellent point. Well, we'll leave it at that, Dave. Thank you for your insights. Hopefully I get to touch base with you in 4 weeks, not 6 or 8, whatever it's been. But for new listeners that don't know of Dave's service, juniorminerjunkiewithay.com. Minimally go over there, sign up for his newsletter. He'll send you his weekly editorial at no cost. Thanks for coming on today's show, Dave.
Thanks again for having me on, Bill. It's always great to talk to you. And yeah, let's make it a month next time instead of so long.
Absolutely.